So let's take a look at this trade on USDCHF. I both called and took. Let's look at why and what we could have done better or differently. Like this video. If you want to see me do this more often, let's begin. So what I firstly want to do is I want to explain why I took the trade. So I'll give you a few different confluences as to why I took the trade in the first place. So we will begin here now. So first things first, as you know, if you look back at any of my other analysis videos, I'm looking at the first and most important thing I do. Confluence number one is to figure out the direction. So confluence number one is figure out the direction. When I go to the monthly time frame, the direction definitely suggests that USDCHF is a bear market, and it makes sense at this point in time for me to continue to look for sells, because why would I want to go against all of this bear momentum? I don't know who in their right mind would try to buy in a market like this, despite the fact that that's what you're taught to believe. You ever thought that that's most likely why you're continuously losing? That's the problem. You're taught to, or you're taught to believe that in a market that's bearish, you should be looking for buys because you buy low and you sell high. I do the exact opposite. The market's going bearish, I'm going to be looking for sells. Confluence number two, looking at the same monthly time frame. When I zoom in, so I'm changing my perspective a little bit. I'm looking at the fact that the last few months from November last year to present day has been quite very much bearish, only having maybe two bull months, and both bull months would have been taken over by the months that preceded after. The most important thing here is if I am looking for sells, if it's a bear market and I am bearish bias, I'm looking for sells. I don't want to see anything that suggests buys, and if there is anything that suggests buys, I want to really have it such that it is broken or it is reduced to nothing as quickly as possible. You want to have those buys be shut down as quickly as possible. Confluence number three, when I begin to, without moving my chart at all, when I begin to look a little further at this level here, if you pay attention, at some point traders would have been selling here at some point, all right, way back in May of last year, June of last year. And these 2 months here, these two candles would have broken out above this level, because we know sellers would have been selling here, which means their stop losses would have been here. This and this move, these two moves here that I'm going to circle, these two moves, these two candles, these two wicks would suggest that the sellers of this level here would have been taken out, and now it is safe to sell. It's very interesting. I want you to keep track of this exact style of trading or this exact style of analysis. Very important, because as we know, confluence number four, the market is fractal. So you tend to see this very frequently, where the market would go up and induce those sellers to sell at a high, just like you've been doing all this time. And then it goes up even higher, takes out your stop loss, and then actually drops. Now, I don't want to just say that this is an M pattern right out the gate, but it could be what M patterns might look like. Confluence number five, on the weekly time frame. So I'm changing my time frame now. If I look, yes, there are some wicks being thrown to the top side here, but they're quickly defeated by the candles that precede. Again, you have some wicks being thrown here, but they're quickly defeated, right? So it's definitely a bear market. So if there are wicks being thrown to the downside and they're being defeated, it suggests that yes, there are traders entering for buys down here, which means there's liquidity in these wicks. That's most likely why the dealer would try to drive price back down to this level. That's just my thinking. Listen, I could be completely wrong about everything that I'm saying here, but it makes sense to me. And that's what is important. Yeah. Confluence number six. Now, this candle would be the current monthly candle, right? So this would not have happened yet when we go in a replayed scenario. But looking at it logically, you have now a level here that is very, very important. A very, very important level, because this would be the makings of what traders would see as a head and shoulders. But here's the problem. A lot of traders do not understand how a head and shoulders actually supposed to work. A head and shoulders is at the end of a bull trend. An inverse head and shoulders is at the end of a bear trend. Now, if you pay attention, this is a bear trend. So an inverse head and shoulders is what you should be looking for here if you were interested in buys. if you're interested in sells, then seeing a head and shoulders, a lot of traders, what this would suggest is maybe sells. But the problem with that is where you're getting for the sell. So instead of looking for head and shoulders here, or instead of trying to identify a head and shoulders, the fact that I am seeing a head and shoulders here, and a lot of traders, I believe a lot of traders are also looking at that, I believe that that adds to the induction. Confluence number 7. When I come down to the daily time frame, again, these candles would not have been here, but you have this very same level inducing traders to buy, because again, a lot of traders thinking that it's low. For the traders who don't think that it is a head and shoulders, and it isn't, for the traders who think that it's actually at a very low point in the market and they feel like it is going to buy, guess what? They'll be buying off of these lows because they've seen a lot of wicks being thrown to the downside. That's exactly what the dealer wants you to think, right? So that's confluence number 7, where traders would have been induced to buy, their stop losses would have been below here, and we know where stop losses are, the dealer is likely to target it. Confluence number 8. So when we come down, so now we have what is actually happening. You have where the dealer would have broken this level, and a lot of traders would have been looking at this as a break and retest. So a lot of traders are thinking that yes, when it comes back up here, it's gonna retest this level and then drop, and they'll get their best potential chance of selling right in here. Maybe they'll even get in a lot earlier and put their stop losses above here. That's exactly what the dealer wants you to do. What I do is I wait. I am waiting. I want to see what happens at this level. Is it that the dealer actually goes here and comes back up? Is it that the dealer goes here and does actually produce the sell? If he doesn't even get to this level and produce the sell, why would he stop here? And that's what you'll see coming very, very soon. Confluence number 9. On the 1 hour time frame, that's a lot of bull momentum coming in after such a big bear move. Why? It's a bear market. Why would the dealer want to induce buyers? Because he wants more liquidity to be able to push the market where it really wants to go. That's just my 2 cents, and that's what I think. That's what I think makes sense in this case. So what I'm doing is I'm actually waiting to see, and this is kind of what I wanted to see. I wanted to see it get to this level and then drop. And if it could have actually started to drop again, somewhere in here is where I would have probably gotten in. But as you will pay attention, when I come down to the 15-minute time frame, confluence number 10, it never got to this exact level here, which would be the break of the previous zone. It actually stopped in this zone, and you'll see that denoted right here. It got there, and it didn't stay there for very long. It actually began to drop. So a lot of traders now are FOMOing. A lot of traders are getting into this market and selling because they want to get in. They don't want to miss the move. They think that they're right, but they don't want to miss the move. That's exactly what FOMO is. So they're entering for sells all in here, sells and sells and sells and sells and sells and sells. And their stop losses would be naturally, because they're thinking that this was the zone, they put their stop losses above here. That's exactly what the dealer wants you to do. Confluence number 11. This is where the saying that I believe it was either Kenneth Fisher or Warren Buffett said it, that the market is simply a machine that transfers wealth from the impatient to the patient. I had to wait. I had to wait to see what was going to happen because I didn't feel like this was the move. If this was the move, it would have happened much more aggressive. So I waited and I waited and I waited, and it sold a little bit. And a lot of traders by this point are probably thinking that you missed the move. But if you miss the move, it would not be showing you these big bull candles again. Remember when we spoke back to one of the first confluences? Go scroll back to the start of this video and watch all of the confluences again. Listen to what I said. The market is fractal, and if it is really the move, it's not going to stick. It's not. It's going to move. The reality is, when you're looking for a sell, you don't want to see things that suggest buys. Those are one of the confluences that I suggested. So why are we seeing bull candles coming in here? What was the significance of that? Right? So I'm looking. So I'm saying, all right, so clearly this is a level here that there's a big chunk of liquidity trapped in this level. So confluence number 12, let me see how the market reacts to this level rather than this level. So said, so done. The market got into this level and it literally started to reject, not only just off of this level, but also the one up on top. That's where I got in. I did not hesitate. I literally sold it right there. The reason being, if you pay attention, any stop losses that were right above this sell here, this level here, this would have been captured. This would have captured those stop losses. And guess what? On this broker, FXCM, or even on my broker, which is IC Markets, the spread was pretty good. What about for confluence number 13? On more sketchy brokers, unregulated brokers and all of that, you've ever seen that on a certain level or a certain time during the day, when your spread is normally like this, sometimes all of a sudden the spread gets like this. This spread widening is to manipulate everybody and to take out any stop losses that were above here. Now, thankfully, my broker does not do this very often, so I was allowed to stay in the trade. I could have been stopped out just like everybody else, but thankfully I was allowed to stay in the trade. Interestingly enough, that's where I sold, and by the time I went about my business, this I realized was the real move. You realize the difference in how it drops here and how it drops here. Confluence number 14 shows the real move. The real move is a move that once liquidity is captured, it actually goes. It doesn't waste time, it actually moves. It targeted this low. Now, it is around this time where confluence number 15, I began the trail. And the problem here is, and I'll give you full disclosure, I was stopped out very, very prematurely on this trade. I was stopped out right around here. Just a minute. I was stopped out with this move here. So it's really unfortunate. Right? I was stopped out because I was trailing really aggressive by this point. Something that I don't typically recommend doing. I don't recommend trailing that aggressive, but I was about to go and run some errands throughout the course of the day, and I really did not have the opportunity or the time to manage it like I normally would. So I figured, you know what, let me trail it and see what it does. I really did not expect it to drop the way it did. And that's where I'm coming to confluence number 16. What could I have done better? Maybe I could have just decided, you know what, let me leave it, let it run a little bit. I will trail it, but maybe not as aggressive. Because interestingly enough, if you pay attention to what USDCHF did after the fact, going into the rest of the day, USDCHF did not hesitate to keep dropping. This is where it came back for more liquidity so that it could drop again. Again, this is where they're inducing buyers. So buyers would be induced all here to buy. But guess what? It's a bear market. Why are you considering buys? Why? Why are you considering buys? This is where I am out of the trade. But by this point, I was already telling anybody who is following my channel, I was already telling everybody, this is where you should move your stop loss to here, move your stop loss to this point. And the last I left the stop loss was at this level, 0.88045. If you're in my channel, the Dynamic Trader channel, you will see this. This is literally the last update I gave at the time of this recording, which is 12:09 p.m. my time. It took just about, I want to tell you, about a few hours before it literally dropped all the way. Now I want you to pay attention to something. My confluences are done. All the confluences are over. So I'm done with this trade because I'm out and I've explained what I did and why I made these decisions. But I want you to pay attention to something. You notice that with the stop loss that I had, because of where and why I put the stop loss where I put it, if you pay attention, it's a 1 to 22 risk reward total. I don't know about you, but these aren't trades that you get very frequently. But when you do get them, it's amazing because these are the trades that make up for any losses. I think that this is how you should actively try to trade. Obviously, you're welcome to do whatever you like, but if you have been following me and you've been listening to this video to this duration, you've got to this point in the video, I'm here to tell you that risk reward is the secret that you've been asking for. And it's not even a secret because I speak about this openly all the time. So I hope that this made some sense to you. I hope that you can use some of these things or the way that my mind works to approach your next trade. Again, full disclosure, I am speaking about the fact that I did not capture all of these pips. Full disclosure, I'm not even going to try to hide that. All right, I am openly admitting that I could have done this a little better. I could have captured more, and it is what it is. But the reality is that if you don't acknowledge where you are wrong or where you could have made improvements, you'll never improve. So, my friends, I hope that you understood this. I hope that you enjoyed. Definitely like the video if you like this style of breakdown. Comment any questions you have, or you can reach out to me directly at EkataTrading. And subscribe to the channel if it is you want to see me break down more trades like this. I do talk about my losses all the time. I hope that you have a great day, great rest of your week, and I will see you very, very soon. Peace out, guys.
I fear that the thoughts build up until I can't hear. that my mind fills up into a creature, and it haunts me somewhere much deeper. Anxiety, filling up every space, no privacy, and silently, it could build and build until you finally see, whoa.